Okay, guys, we are live. How exciting. Welcome, and thank you so much for joining us today. It's lovely to see you. And again, just commenting on the beautiful background and the very kind of like vibey shirts going on. Like it's January and I feel like we're all kind of begging for the Maldives here. I love it. Sorry for not sorry for not helping with my horrible
Your
knitting
attire.
jumper.
We'll
Yeah,
let you
sorry
off.
about that. I'll nip home and put a big flamingo shirt on next time. Today we'll be talking about cross-border growth, the opportunities that it brings, and why taxes obviously can be a massive challenge. Cross-border. Okay, I've just realised why you've got a holiday background, and that took me way longer than it should have to realise. Oh my god. Okay, sorry about that. So we're going to cut through the confusion, look at some practical tips, some real world insights from both of you. Meanwhile, think about how wonderful it would be to be in a hot country rather than stuck here in the rainy UK. So that's the vibe we're going for. So could I ask you both to introduce yourself? Start with yourself, Raquel.
Absolutely. Well, thank you so much for inviting me. My name's Raquel Pinto. I'm a senior tax technology manager at Avalara. And essentially, I specialize in VAT and now sales tax and e-invoicing, which is becoming more and more relevant. So essentially here to support businesses kind of navigating those challenges and supporting them, of course, with our solutions to solve their problems.
Brilliant. Thank you. And Matt?
I'm one of the co-founders of Chloris, and we operate in sort of the health and wellness space. We produce natural health products that we sell across the UK, across the EU, and as far as sort of Middle East and Japan. So we're quite global in the way we trade.
Brilliant. Thank you so much. It's a hot topic at the moment. So it's lovely to have you here. There's lots of questions here I'm really excited to hear your answers to. Cool. So just quickly, I'm Rose. I'm the Events and Partnerships Manager at Quickfire Digital. We are a Shopify Plus agency. We help brands create beautiful websites and we help them stay that way and also help them with international expansion as well as they start to build their brands abroad. So let's start with just setting kind of the scene. So obviously for anyone who's listening in or rewatching this, expanding your e-commerce business across borders can be really super rewarding. We've heard all the wonderful stories about what happens when you get into places like the US or when you manage to go big around Europe. It opens up new markets and new customers, but like all things, it comes with complexity, and especially when it comes to taxes, there are difficulties. So different countries have different tax regulations, VAT rules, compliance requirements, and obviously mishandling these can lead to some unexpected costs, more compliance issues, penalties, and it can really impact on profitability and customer trust. So today we're going to break this down, discuss some practical ways to handle cross-border taxes so they don't become a roadblock and instead they support your growth. So we're going to hear from Raquel a bit more from Avalara, who's an expert on global tax compliance, and obviously Matt, who's navigated these challenges firsthand. So let's dive in. How exciting. Let's learn how to tackle this stuff. So Raquel, let's start with you. What do you see as the biggest tax challenges for businesses looking to expand internationally?
Well, that's a really great question. I mean, I think you pretty much hit the nail on the head there.
I didn't write the question, so
like you mentioned, there is a lot of ongoing complexity due to those varying rules. Not only does every country have varying tax rules specific to that country, in some instances there could be country-specific filings, complex annual filings, even things like bookkeeping requirements, and even now real-time reporting, which is even more complex. And so unfortunately these rules, they're continuously changing and they're being updated. And so to add to that complexity, you've also got language barriers, variations in tax portals, how these returns are filed. MTD in the UK is a great example of that. And just to add a bit more context to how challenging this can actually be, in the US alone, there were over 30,000 legislative tax changes last year. So, these could be changes in tax rates, compliance requirements, exemptions. So you can probably imagine how hard it is to keep on top of all of that. And on top of trying to grow your business at the same time, it can almost seem like a bit of an impossible task. But unfortunately, it's the business's responsibility to ensure that they are continuously updated. of those tax laws in those territories. And as we all know, the reality of getting it wrong can literally be the difference between success or inefficient processes. And unfortunately, those will eat at profit margin. So, and worse, can expose the businesses to risk. So it's really important to get these things right now more than ever. We've got added complexity of e-invoicing as well that's coming around the corner. Before, these obligations were generally for specific transactions and only impact like resident businesses. But now, you've got non-resident businesses that are having these issues more and more. And obviously with the rollout of that in the digital age, which we can talk a bit more about a bit further down the line, to do with e-invoicing, it's really important that businesses that are trading internationally, comply with these requirements in the next couple of years to be as proactive as possible with that.
Perfect. What a brilliant answer. Thank you. And yeah, if also Pooch in the background would like to join in going forward.
Oh, I'm sorry, he's gone
He's
now.
super
The
welcome.
moment in time.
Super welcome. Yeah. No, I love that.
Home, right?
I love that. It's one of my favorite things about hosting these is either dogs or kids getting involved. And I'm always so disappointed when we don't get any. I'm like, come on, bring them on screen. That's super insightful. Thank you. And yeah, already when you talk about like the changes in the US alone, it sounds absolutely terrifying. So it's nice to know that there's companies like Avalara out there to help people navigate it, because most people who go into business and start selling a product aren't tax specialists. It's one of those many things that comes with owning a business that you don't always mitigate for. So we can take a deeper dive into that. And Matt, from Cloris's perspective, for you, what's been the toughest part of managing cross-border taxes, and how did you approach it?
Oh, so I guess the biggest challenge overall, as Rick just hinted on, is understanding sort of what the obligations are in the first place, and what the implications are for that in trading that, and the impact it has on whether that's even worth going to certain territories as well. I think you need to have a look at if you want to sell there, but also like what mechanism you're going to use. So when we first started, we were primarily shipping everything from the UK and delivering it in. Because when we first started trading, we were still in that sort of transitional period where you could get goods like relatively easy from the UK into the EU, and that pretty much changed overnight. It became really, really difficult for us to reliably get goods into Europe. Even going down the route of shipping sort of goods duty paid from the UK, there was still no guarantee that they would get into Europe, and we were suddenly faced a situation where that was creating just a really bad customer experience for us. And so that was really what sort of led us into sort of taking like proper steps into. I'll focus mainly on Europe here because that's our biggest sort of export market. And so that we found that the only way really around that was to actually go the full way and get a 3PL and a warehouse in Europe. And then obviously on top of that came all of our tax obligations. So we're having to report for VAT and the like within Europe. We found that we want to take that on because that gives us a much better experience to our customers. They don't have to worry about where they're buying from. They don't have to worry that the package is going to turn up and they're going to get hit for a fee that no one can actually tell them exactly what it is until the carrier decides to charge it for them. Like I say, we started like that, but that's just a really bad customer experience. And the last thing you want is to spend all that money getting someone to buy from you, and then at checkout it's like, well, we're going to send this to you and you're going to get hit with some fees that we can't quite tell you what they are when the parcel arrives, and we can't even tell you when it's going to arrive because it's going to have to clear customs. Who knows how long that's going to take. So that was our real driver for going into Europe. And at that point, we looked at what our obligations going to be, and we went to Avalara run all that side of it for us, and made that really, really straightforward and easy for us to do.
Fantastic. Yeah, that's one of the things like that we haven't even touched upon is the customer experience. How does it feel for them? And buying things from overseas, I know as a consumer, makes me very nervous for the exact reasons you've listed. Is it going to arrive? When is it going to arrive? Are there going to be additional fees? So it's good that you touched upon that, and also obviously the fact one of your products contain CBD, and that isn't. There's so many rules around that. Like it's still a substance that's still got
Yeah,
so many legislations. It's really
makes it
interesting.
so much more complex because
Yeah.
even though our products are legal in Europe, like if we were shipping direct to a customer from the UK, then we would find that if we're shipping to Holland, it's no problem. If we're shipping to Spain, it'll probably never get there because they all have their own interpretations of the rules. And actually, by moving our product into Europe and then distributing it from there, we avoid all of that because once it's in Europe, it never has to cross customs border again to our customers. And so it creates a much better customer experience. And overall, for us as a business as well, it's much. Once we've got everything set up, it's much easier for us to run that way because we can automate a huge amount of those processes. Then, and we know that we're providing the best possible customer experience as well.
Yeah, absolutely. Cool. Perfect. So when we're looking at getting started in new markets, so Raquel, obviously there's quite a lot that Matt covered there, but it'd be good to understand when businesses like Cloris enter new markets, what are some of the tax issues they would usually face right away, and how can they prepare for them?
Yeah, absolutely. Well, I think, Matt's touched on, a lot of that just now, but like I mentioned before, the key issue obviously is getting everything, trying to get everything as compliant and as accurate from day one, understanding those country-specific compliance requirements that you really ideally, in an ideal world, need to address proactively in order to remain efficient and obviously minimize any risk of unnecessary fines. As we all know, this can be challenging, it can be costly, and it either really involves hiring an in-house cross-border tax expert, which most businesses, don't have the budget for when they're just getting started, or spending thousands, on that kind of ongoing advice. So, essentially, that's one of the main challenges. We all know it's quite difficult to kind of research this yourself online as well. But just like Matt mentioned, one of the key issues that tends to come up now, particularly for businesses in the UK post Brexit, is that added complexity of managing those import VAT obligations efficiently when shipping internationally. There's that careful balancing act, like you mentioned. You want to ensure that customer receives a seamless experience. You want to be competitive. And getting it wrong can significantly eat into your profit margins and hinder, your chances of success with that expansion. So really, you want to prioritize identifying these efficiencies as early on as possible. Because things like that can really impact your bottom line. Simple mistakes like, not having a local bank account if you're expecting to get a refund from the tax office. In certain countries, this is a requirement. Or maybe, you didn't know that you needed to have your own URI number to be able to recover your import VAT, and you've been using your couriers. And then further down the line, you just realized you're not able to recover thousands of pounds. So, those are all issues that do tend to come up that businesses aren't aware of. And, the good news is, though, Avalara, that's exactly what we do. We support our customers. We understand, their activity and what they're looking to achieve. And essentially, we assist them by guiding them through that, making them aware of any efficiencies they can apply to potential supply chains and their processes. Our aim is to really ensure that our clients remain efficient. There's methods such as postponed accounting, VAT deferment schemes that they may not be aware of, and we can guide them through that. And that really, allows them to focus on more revenue driving activities rather than complex and burdensome, tax obligations.
Yeah, brilliant. Thank you. And already there's so much in there that you've listed just as initial as well. So yeah, I imagine navigating it without the help of someone like Avalara must be absolutely terrifying. Yeah, it's like buying a house without a solicitor.
Yeah.
So thank you, Matt. Kind of, obviously there were some initial challenges that Raquel mentioned there. How did Cloris specifically handle these initial challenges?
I guess so. The first thing is we look at each market and we assess, what's the potential of it, how much sort of local adaptation is it going to require for each market, and then what's the approach going to be. So with Europe, it was fairly straightforward for us because we go into one and we can pretty much handle most territories. So it becomes quite streamlined there. But for other export markets, we've actually looked at and gone, well, actually doing it directly doesn't make sense because of the burden. And it's not only the tax side of things, but if you're bringing products in, then you've got local product everything from labelling to registration and compliance, all that side of things as well. And so we take a call on each area, and in some, if we still want to go into that territory, then we might look for a local distributor there to handle it for us. And when we do that, just to make things easier for ourselves, because we're a small team, is we always do that on an ex-works basis. So we'll do a deal there where our responsibility ends at our warehouse door, and the distributor takes care of everything else in the local country. And having a balance between those two things can be, I think, a good way for certain smaller businesses who haven't got a lot of in-house resource or don't want that burden of taking it on in specific countries. That is another way to go. And so we have a mix of that for different territories. Europe, we do ourselves. The Middle East, we have a distributor relationship. Japan, we have a distributor relationship, because we did this on it. It's not worth the extra lift for us to try and control that directly. And some markets just have real nuances in terms of how you need to position and how you need to work with regulators and things like that as well. So it's doing your due diligence on that first, and then deciding which path is appropriate for you, I think, is really important as well.
Fantastic. Yeah, and also identifying the markets where it's worth it and it's not worth it, right? Like, especially if it's going to be such a faff. It's like, are we going to see the return after we do so much?
Yeah, and it's hidden costs as well that you might not think about. So for us, actually, we don't trade in the US, partly from a regulatory point of view, but also right now, until we get to a certain scale, the cost isn't worth it for us, because literally just looking at product liability insurance for the US is 5% of gross sales. So it takes a huge hit on your margins when you start to look at things like that as well. So you really need to look at all of the implications.
Yeah, absolutely. Cool. That's really interesting. Thank you. And looking at smooth operations here, so using automation for smooth operations. Raquel, can you give me an example of how automating tax compliance has made things easier for an e-commerce brand? Not Cloris, different one.
Yeah. I mean, of course, this is what we do every day. So, I mean, a great example of this would be, for instance, a client I recently, worked with, the US-based, very well-known headphone speaker company. They recently purchased multiple tax solutions to support their kind of global expansion. And really, this investment has essentially enabled the business to automate and streamline the majority of its international compliance, and in about 10 countries. Obviously, a significant amount of efficiencies with that. To give you an idea, before that automation, they had extensive teams manually handling their calculations using Excel, trying to keep on top of these legislative changes that we've been talking about, struggling to understand accurate requirements. And so you can understand, this is very time consuming. It's prone to costly errors, particularly as their obligations were only growing. And, as a result, they were regularly receiving fines and had been exposed to 2 costly tax audits. And so, they've invested in our technology. They have a global compliance solution now that's automating, all of these tasks. And this investment really has allowed them to, have that confidence that they're accurately reporting. They're now using that technology that offers that accuracy guarantee. We've got obviously hundreds of validation checks going on their data rather than, spot checks that are, of course, inefficient. And the business operations and finance teams now can focus on those kind of more strategic revenue driving projects, and having that confidence that risk exposure they previously had from those kind of heavy manual processes has now been, completely eliminated.
Brilliant, thank you. So I was muting myself while there was a kettle going on.
Okay.
Yeah, thank you. And I think we'll see more and more automation as kind of technology continues to improve, and we see the use of things like AI. So it would be great also, Matt, to hear how automation has helped Cloris in terms of streamlining its international operations.
Absolutely. So we're a big fan of automation to sort of do the lift work for us here. So for example, we have a dedicated site for the EU running on Shopify Plus, which we hook into our accounting platform Xero using A2X to basically automate our sales and transactions going in and our cost of goods. And then we take Xero into Avalara to prepare our EU VAT returns, so like a one-stop shop returns and our Dutch VAT returns, because that's where we're located in Europe as well. And so that whole thing is really light touch from our perspective. It's great. I know it is, because I actually just signed up our VAT returns for you this morning. So it's that is really straightforward. It is the vast majority of what's automated, and we do sort of one final sanity check to make sure that everything looks right. But having that automation in place is great, because I can literally see on a daily basis what should actually be done, what is our liability that's accruing there, and it makes it really easy for us to stay on top of that. And the days of having to churn through hundreds of spreadsheets and look for the error in the calculation are long gone. So the tools are out there to make it really straightforward. There's a bit of setup to do, particularly with the automation integration tools. But once you've done that and you get that right, it makes things phenomenally easier.
Great to hear. Great. You're doing my job for me, Matt, so I appreciate that.
Well, we love having a brand on here as well, right? They have real
Absolutely.
stories. So this is the question I was really looking forward to answering. Maybe I'm a little bit jaded because my tax code was wrong last year, so I'm still a bit bitter about that. So profit margins and tax management, how on trend? So Raquel, so obviously taxes can really affect profit margins.
Yeah.
Really affect your ability to buy a new kettle, because you thought you would have more money coming in than you did because you made a mistake, and who cares? HMRC don't care anyway. So what advice do you have for businesses to manage taxes without cutting too deeply into profits, which I know obviously Matt touched upon earlier about, is it worth it? It gets to a point where, does it actually make sense from a business perspective?
Yeah. No, that's definitely a really great question, and you definitely see that businesses, they want to focus on growing, and making money rather than spending it, especially at that initial stage. But essentially, I think, if you're looking to cut costs as a business, particularly if you're a business that's, that initial kind of startup phase, it's really important to make that fully informed decision on the details of the potential risk exposure you could, incur. At least that way, when the business can invest in compliance, it has already kind of taken these factors into account, ensuring that any impact of this is minimized, because you can't bury your head in the sand all the time. It's going to be addressed eventually, and it's as long as you are aware of what that's going to look like in practice, you will be better prepared for that, and you can minimize the impact of that. I think also, I can't strongly recommend enough taking the time to identify any tax efficiencies that that the business may be able to benefit from and apply to minimize costs from day one. Like I'd mentioned before, with VAT deferment schemes, postponed accounting, there are schemes that enable businesses to avoid paying import VAT at the time of entry, so they don't have that impact on their cash flow. So having this information in advance can be really valuable. And then last but not least, another example of a great efficiency that would probably be a game changer if businesses are proactive and understand these schemes, would be the IOSS scheme, which is import one-stop shop. It enables businesses to sell throughout the whole of the EU with just one return, whereas before you'd have to worry about registering in every country individually as your sales grew. So having this information could really kickstart your business in a super cost-effective manner. And it's unfortunate, because we still see that despite this being launched in 2021, businesses are still unaware of its existence and are struggling with complex, importing and exporting processes that they don't have to be. So, I think those are kind of really key points that would be beneficial for businesses to understand in advance.
Brilliant, thank you. And yeah, like you said about things people don't even know about, those are kind of some of the differences sometimes between making a profit and not, or making something viable and not. And so having if it's not your area of expertise, why would you know? Sometimes they're not super accessible. So cool, thank you. Matt, what strategies has Chloris used to keep profitability in mind while staying compliant in different markets?
So again, if I focus on the EU, because it's probably the sort of simplest one to understand, but in other ways quite a bit more complex, because it boils down to sort of know your numbers. So we wanted to have a sort of consistent pricing strategy across the EU, because just like the UK, you've got to present the end consumer pricing like fully inclusive of the tax that they're paying. So we basically worked back from that. We worked, well, what's the highest VAT rate we're likely to pay in Europe? What's the lowest? Where do we think the average is roughly going to lie? And sort of worked back from that. So then looked at all the other things we're going to have to account for then as well. So there's obviously the increased shipping costs, because we have to get it from the UK into our EU warehouse. We have to hold it in the EU warehouse. All of those things have a cost attached as well. Yeah, work out what our average VAT rate is likely to be, and then what we think is, a good hedge to allow for currency exchange rate as well. So you'll take all of those things into account when you're setting your end customer pricing. So we looked at all of that, made sure we built in enough margin there that we weren't going to have to sort of continually change prices. We still want to make it accessible and good value to our European customers, but we have to acknowledge the fact that there are additional expenses for that, and we need to allow for that in the equation. So I would say anyone going in there is really look at that, understand how much your product price is going to be the tax component, how much is going to be your logistics side of things, what do you need to build in to allow for the exchange rate fluctuations, and what are you doing with that? When you sell online, are you getting that money back from, if you're using Shopify, are you getting it in euros, or are you getting it in sterling? Are you also then getting hit for an exchange rate fee on that as well? All of those things will chip away at your margin, and it's really important, I think, to do those calculations and sort of look at it in the sort of cold hard light of day and make sure that you have allowed enough of that to sort of bake into the pricing. And we found that customers are fine paying that sort of additional price, because they get a much better service, because again, they know exactly what they can pay. There's no hidden surprises there. They get their product much faster, and they know that that is the price that they're going to pay. But I think from a brand perspective, it's really important to do those sums and make sure that you understand those numbers, because it's too easy to just sort of go in there and think, just match our UK pricing, and then suddenly realise that your profit margins have disappeared with all the additional costs.
Brilliant, thank you. Okay, great. There's some really good insights there, and so I want to go back a little bit to something that Raquel mentioned earlier, which was about the US bringing in what was the number again? You said
over 30,000.
Over 30,000. So changes and update in a year, which is just insane. So obviously changing regulations is something that is really hard to keep on top of. So Raquel, starting with you, tax regulations are always changing from the sound of it, especially in the US. What is the best way for businesses to stay ahead of these changes?
Yeah, no, that's a really good question. So, I mean, I think if you're not using technology, of course, we're going to always recommend, you're selling a variety of products, potential services, maybe SaaS. It's extremely challenging to stay on top of these constantly changing international regulations. Right? We all know that. Of course, if you can leverage technology and tax software, that's the ideal scenario. Many modern day platforms, like those designed for compliance, like ours, integrate with your ERP or web shop to ensure that kind of real-time content updates. But if you can't, I'd say you probably want to consider a mixture of a few things. So I try and work with tax professionals, we mentioned before, getting it wrong can be the difference of having a profitable business or realizing actually that all your profit margin has been eaten into due to an unforeseen oversight. These professionals, they're going to, or a knowledgeable partner of some kind that can ensure that business has, some good guidance. Subscribe to regulatory tax notices where possible. Any industry specific news sources, for instance, they don't like what we're doing now, provide those kind of timely updates on tax code changes, deadlines, compliance requirements, etc. And then 3, if at all possible, engage in regular training and webinars. Platforms like this provide really great insights into upcoming tax changes and what to kind of be aware of on the VAT horizon.
I love the casual plug for a webinar as well. So thank you very much. And I know that obviously Avalara do a lot of those updates and webinars. In fact, there was one I joined yesterday. There are just constant advice on changes, and yeah, there's so much information out there that you guys are providing just for free. So definitely, as a starting point to look at the stuff that Avalara is putting out there, and yeah, to hopefully then engage with you for more help. So Matt, going on to you, how has Chloris adapted its strategies in response to all these changing tax laws?
Yeah, I mean, it all starts with you've got to find good partners to help you with that. Yeah, you can't do it yourself. So yeah, we rely very heavily on Avalara and our accountants to help keep us on top of that, really. And then it just falls into like our regular sort of evaluation of the business. And where are we trading? What are we doing? Where do we want to go? And how does regulation sort of play into that? So yeah, we do constantly look at that. In our decisions on which markets we're going to invest in, which ones are we looking for partners with, and how do we structure our operations around that. So it's really important to keep on top of that. But yeah, you need good partners to be able to do that. You can't do it all yourself. But there's a lot of great education out there. But then it is find those trusted advisors and use them.
Brilliant. Love that advice. Thank you. You've got information, use it. Cool. So let's talk about small businesses, because I think when you're looking at larger businesses, they have the help they need and they have the funds and the advice in order to get it right. So Raquel, when it comes to smaller brands, often they don't have a dedicated tax team. What's your top advice for small businesses just starting to sell internationally?
Yeah, I mean, I think we really touched on it quite well before when we talked about, how to avoid cutting like deeply into profits initially. Essentially tax is not going to be at the top of everyone's agenda. It generally isn't. It's at the bottom, right? But unfortunately, ignorance is not bliss in this regard. And unfortunately, we do see it way too often. Businesses want to make money. They sell now. They won't want to worry about tax compliance later. And usually quite sometimes pass when it starts to become a priority, or they maybe received a letter from the tax office. So I really can't emphasize enough, knowledge is power in that regard. Go get informed, read up as much as possible, at least try and gain a good high level understanding of some of these efficient schemes that your business can potentially benefit from. But yeah, also have a good understanding of what the risks of getting it wrong are, so the brand can be fully informed on any potential risk and what that actually means. This is definitely going to be much better than burying your head in the sand and realizing down the line that you've got to deal with a problem that could have been avoided, or could have been a lot less of a problem, if you'd been more informed.
Brilliant, thank you. And yeah, I know obviously we've touched upon it a few times already, and I think this advice is specifically for businesses actually who don't have a tax team, because they're starting out and they're learning, and yeah, hopefully things like this will be able to help them have an idea of where to start, so they don't, as you mentioned, bury their head in the sand. So Matt, when Chloris was first starting out, before you obviously now tax expert that you are with all the help of Avalara, what steps did you take to handle taxes effectively?
It was really trying to get as much of the advice that was out there as possible to sort of understand what our obligations were likely to be, and then what the best approach to those was. So so things like the one-stop shop service, when we found out that made things infinitely easier, because if at first you go, I'm trading with Europe, we've got to do 20 VAT registrations in multiple languages, and that, if you look at it from a small business point of view, that pretty much makes it impossible. But then you find out about a scheme like that, where it's actually okay, then this becomes much more manageable. And then really digging into how do we make that work? Again, is it worth it? Is at this stage of the business, I think it's really important for business to look at, is this the right time, or actually are we going too early on this? I think it really depends what you're selling and what your target market is as well. Because going to the other markets can be fantastic, but I think if you do it too early, it can pose a significant challenge, and you run the risk of going off and sort of chasing something before you've actually really got. You need to, if you're a UK business, then you need to make sure that you've got a solid base in the UK almost certainly before you start expanding out. it will vary from sector to sector, but certainly what we do, because there's a whole, tax is a very important part of it, but there's a whole heap of other legislation involved in skincare and health and wellness and things like that, and you've got to really be aware of all of those obligations before you go into another market in a big way.
Brilliant, thank you. Perfect. So it's my final question to you both before we open it up to Q&A. Thank you so much for all the insight you've given so far. So looking at turning compliance into a competitive edge, I know Matt obviously touched on earlier about the potentially bad customer experience that can come from not getting it right when it comes to additional fees and delayed shipping, etc. So Raquel, I'm going to start with you. How can being tax compliant actually help build trust and give a brand an edge in the market?
I mean, so being tax compliant obviously is going to significantly enhance a brand's reputation, right? When a business is tax compliant, it shows transparency. It shows that the business prioritizes regulations, its customers, and generally more likely, customers are generally more likely to trust brands that demonstrate that kind of ethical behavior. It offers confidence in financial stability to its customers. The brand is perceived as financially sound, well managed. And really that kind of gives that extra reassurance to customers, and that company is reliable. When we're talking about investment as well, it's crucial for attracting investment. Investors are not going to fund companies with, generally speaking, with tons of risk exposure and non-compliance issues. They're more likely to fund companies with clean financial records, no tax liabilities. It demonstrates its operational efficiency and risk management. And I think lastly, reputation. Reputation management is extremely important, and issues with non-compliance can really lead to negative publicity, damaged reputation, and that can really be something that very, very challenging to recover from. So I think all those factors are really, really important to consider.
Brilliant, thank you. And Matt, have you seen compliance positively impact Chloris's customer relationships?
Absolutely. I mean, we see that just from the repeat purchase rate from our international customers, because they know that it's a smooth experience. They're going to get the product in a timely fashion. There's no hidden surprises there. It's made us able to replicate the experience that we strive to deliver to all of our customers in the UK on a much wider global basis, and that's really important for us, because I don't want to be doing something. We don't want to be trying to sell internationally if our customers get a really bad experience, because it's such the brand. It makes it really hard for us to build a good reputation. It's vitally important for us as a growing brand.
Brilliant, thank you. Awesome. Both of you, thank you so much. It would be great to get any questions from the audience. We've got a couple that were pre-sent that we can go through, but if anyone who is listening in would like to submit any questions, please do so now on the chat, and I will try to answer them. Well, I won't answer them. I'd be terrible. I give terrible tax advice, as is clear. But what's that noise? Oh, it's really windy here. Don't know if it is where you guys are. The storm has suddenly kicked up here. It's just suddenly this big. It's like, what is going on? So one of the questions that was pre-submitted then, I'm going to start with Matt. I'm going to switch things up a bit. Matt, as Chloris grew, how did you adjust your tax strategy across different sales channels to keep everything in sync?
It's a good question. So I guess it comes down to deciding sort of where your source of truth is. So we have two systems that all of our sales go through. So either through Shopify or our B2B sales, it's going directly through our accounting platform, Xero. And then it's making sure that those are set up to handle things in the right way. Shopify very helpfully now for our EU sales, it sort of automates all of the various different tax collection, tax data for our end customers. And then when we're dealing on the B2B basis, like most of that's relatively straightforward. We can sort of lean on the fact that it's reverse charge for most of our EU customers, but there is a bit of complexity there because without getting into the weeds, because we're based in Holland, if we share something to a customer in Holland, then it's not, and so we have to be aware of those little things. But it's making sure that our we try and keep the platforms as straightforward as possible. So it goes through one of two. So I only have to make sure that those two platforms are set up correctly to manage things in the right way. And that makes it a lot easier to sort of scaling up what we're doing.
Brilliant. Thank you. That's a great answer to a very strong question. I say it's strong. I didn't write it. So a question for you, Raquel. Are there any upcoming tax changes that brands need to be aware of and need to keep an eye on as they plan for international expansion? I don't know if you have like insider knowledge.
I say definitely there's always something new arising, you know, on the tax landscape. You know, we've been through a period of recent changes with Brexit, obviously, you know, introduction of OSS, there have been some major changes. But I think the one that really businesses need to kind of be aware of now is e-invoicing. You know, these requirements are coming quickly. They are impacting businesses globally. The EU, more and more EU countries are starting to mandate this requirement, and each mandate varies from country to country. Of course it does. So, you know, it is very important to kind of be aware of that. We are going to be seeing some really significant changes with things like real-time reporting. You know, the tax offices, they want more and more visibility. They want to reduce that back gap, you know, and make sure they get all their money. So I think that's definitely something really, really important to kind of like start researching and understanding, you know, is that going to be impacting you in the future? You know, I think in 2026 or 2027 is going to be mandatory for EU businesses trading cross-border. So, you know, really important to kind of keep on top of that. And then I think another one which is important to mention, and it's not a new change, but it was a change that it's quite surprising. A lot of businesses that sell on marketplaces still are unaware that the marketplace has the responsibility to collect and remit on the customer's behalf when they're an international seller. So, you know, a lot of businesses using local accountants that don't specialize in international taxes aren't aware of that. You know, we often see as a result that being paid twice, you know, taken from Amazon and then being paid by the customer directly. So I think those are kind of important changes that would definitely be worth considering and keeping your eye on, you know, for those types of activities.
Brilliant. Thank you. I'd actually already heard about the e-invoicing, so I feel like I'm now like in with the tax crowd. Like,
it's hard to get away from it now, I tell
you. But yeah, so there are plenty of those which, you know, I'm sure people who will be watching this either on a catch up or are watching now will not have been aware of. So it's really good to have that little bit of extra knowledge. So thank you. Cool. Well, let's wrap up. Obviously some really brilliant takeaways today from the importance of not burying your head in the sand and actually facing tax head on, and that you don't need to do it alone. There are companies who can help you, Avalara being our big highlighted in big gold letters here example. And also the impact it can have on a brand if it's not managed properly, and you know how you know, the great examples Matt has given about how when managed correctly, it you know, it can actually build customer trust, which is really lovely to hear. So to the people watching this, please do follow up with your questions directly to Raquel. Please do connect with her and see how Avalara can help your business. If you guys are wanting to check out some of the Chloris's products, please do follow Matt, ask him questions. I can say from experience, he's a really helpful guy and he'll answer anything. So thank you. And also for more insights and, you know, updates on the world of Shopify or just e-commerce updates in general, please do follow Quickfire. We're doing loads more webinars and content and blogs and all sorts happening this year. So yeah, we'd love to have people involved. But those are my closing comments. So thank you so much, both of you, for taking the time to join us today. It's, you know, having experts like yourself is so invaluable, and being able to, you know, pick apart your brains just so helps our audiences. So thank you.
Thank you. It's been a pleasure. Thank you for the invite.
Cool. Thank you.
Thanks a lot.
Bye-bye.
Bye. I think we're done.